Advisor Mohamed El-Erian able to join us. Mohamed, great to see you. Thanks for joining us.
Thank you.
I wanted to touch, first of all, on the outlook for yields. I mean, clearly they spiked. They've now stabilized a little bit. Is that stabilization that we've seen important for equity markets in the year ahead?
It is. Had we continued to see the very rapid steepening of curves, that would have been bad news for stocks in two ways. One, in offering a bit of an alternative stream of income elsewhere, and two, in undermining the discounted cash flow story. But what's really interesting is how quickly the central banks came in and said, you know what, we want to preserve loose financial conditions. We heard it again from the ECB. So the central banks are responding, they're almost fine-tuning their policy interventions in terms of words to market moves.
Are they going to be able to keep doing that if we get $1 trillion or $2 trillion, as Biden is proposing, more stimulus, Mohamed, on top of the $900 billion that was literally just passed?
So that's the big question, Sarah, and it's important for the markets to focus on that. If, and I stress if, because the Democratic majority is razor thin in the Senate, but if we get the fiscal package, and if we get a second fiscal package in February, which we should, and the Fed continues, and some of the excessive income relative to trend consumption comes into the economy, you're looking at 20 to 25% of GDP in terms of injection. That will raise inflationary concerns. So keep an eye on that. I think that what you'll see the central banks ultimately do is change the pattern of what they buy in order to try to repress yields. But it's going to get a lot harder going forward if all this money materializes.
So if all of that happens, Mohamed, do you want to be buying gold? Do you want to be buying Bitcoin?
I think Bitcoin is really tricky because there's such a big layer of speculation on top of long-term holders, and you saw that today. But I do think that it raises a real issue, which is where is risk mitigation in this market these days? Where do I go for a bit of risk mitigation? And ultimately, you're going to be pushed into some combination. Where I would focus most, if you're looking for risk mitigation, is the front end of the curve. That is very solidly anchored. That the Fed can keep control of.
Mohamed, great to see you as always. Thanks for joining us.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.